Got Sudip Bandyopadhyay as well joining in on the show right now. Sudip, hi, afternoon. Good to have you as always. I guess one is seeing broadening of the GST rationalization sentimental move play out in the markets, and newer names are now joining the bandwagon. Sudip, anything that you would recommend from the entire consumption theme?
Well, I think consumption, of course, is exciting, and I would indirectly, recommend an indirect consumption, which is cement. I think this industry has been doing pretty well. If you see the quarterly numbers, the numbers have been pretty good, impressive. The industry has done fabulous cost control. Demand is picking up. Government is spending huge amount on capital expenditure, and that's leading to significant increase in demand, which will result in pricing power coming back. Post monsoon, we will see a lot of excitement. On top of this, this excise rationalization will benefit the cement industry, which was attracting 28% GST in a big way. I think per bag cost will come down by 25 to 30 rupees once the rationalization happens. That should spur further demand and help the industry. So cement is one segment where we have been bullish, and we increase our excitement on cement even after this GST rationalization proposal. Beyond this, I think the other segment, which I think everybody's talking about, is consumer durables. We have been positive recently in consumer durable on the back of the fact that the festive season is setting in very soon. Monsoon has been good. Interest rates are coming down. Government has given relief to the common man on income tax. So all this was auguring anywhere well for the consumer durable pack. Now this GST reduction, on top of everything else, is a bonanza, and I'm sure consumption demand for consumer durables will pick up significantly in the festive season. So one can look at the air conditioner manufacturers like a Voltas, or even a OEM like a Amber Enterprises. I think these are good stocks to buy from a long-term perspective even now.
All right, so those are some of the sectors and pockets that are looking interesting to Sudip right now. But for this, let's also get you some of the trading ideas from both of our experts. And Arpit, you go first. Tell us which is the stock that you are tracking right now.
So looking to overall market specific, so pharma space is relatively resilient, and within that we talk about, so you have two ideas, one would be the pharma, second would be from the NBFC space. So pharma, look at the chart structure wise, good risk reward entry is seen, lowest lag. So look at the technical structure, monthly scale strong uptrend, weekly scale a range breakout above 870 levels, daily scale hovering above its 20 demand. So strong uptrend, and the stock is likely to scale back to its previous life highs. So one can go long with keeping stop loss of 855 for an upside move towards 920. Second move from the NBFC pack. So Bajaj Finance, if you look at the chart structure, Bajaj Finance good recovery or seen from the lower levels on the weekly scale, negative the formation of lower highs after 4 weeks. On the daily scale, the stock is consolidating, but the entry point is very favorable as it's near its support zone. So I think from here on, risk is quite favorable. One can go long, keeping stop loss of 870 for an upside move towards 950 zones.
Two stocks from Arpit's on Arpit's radar. One from the pharma healthcare diagnostic laboratory space. In Bajaj Finance, we also had a Jefferies note where they have initiated their research on Bajaj Finance with a target price of 2420, and now Arpit also is positive. 950 is the target on Bajaj Finance, and 870 is the stop loss. So 0.5% to 1% gain we see. Kapil, what will be your trading ideas for the day, the closing trades?
Yes, so here I first want to go with an EV Capital. So EV Capital has been under a very strong uptrend, and after the time-wise correction and having the ratios around the 282, so in past couple of 2 to 3 trading sessions that has been sustained. So we are seeing the bullish continuation sign on this. So right now the stock is trading in the 289 level. So with the stop loss of 280, we are bullish on this, and with an upside potential of around 310, 320. So there is a first stock, and another stock is in a Dr. Reddy. As the pharma stocks are finding the traction after the 4 and 5 trading session blips, again it is finding the traction, and within the Dr. Reddy it has fallen down, came to the base, show some sorts of violations, but now again sustaining the move on the higher side. So at this particular point, Dr. Reddy seems to be in buy opportunity with a stop loss of a 1230 level, and on the high side 1360 will be the target.
Sudeep, I'll take it from you. What is your take on this entire thing? Because exchange ancillaries, as we see, we have seen good amount of upticks in our previous sessions, but now because of the statements coming in like this, and also we do see some sideways actions, particularly in the capital markets, exchange ancillary platform stocks. Is the undertone for the long term bullish?
Well, if you are talking about 3-5 kind of year time horizon, definitely, because we believe market infrastructure institutions will continue to do well. Financialization of savings is real. But leave aside the 3-5 year kind of time horizon. If you look at a slightly shorter time horizon of even 3 to 6 months, 1 year, I think there is volatility and there are challenges. Look, the regulator and the government, I think, is very focused on kind of protecting the common man, protecting the small investor. There is a thread running through the thinking of the government. If you look at banning of online games, coming down on FNO in a big way, because the data shows that 90% plus people lose money when they are trading in FNO. So I think they're trying to curb this speculation. And to ensure that speculation comes down, they're taking multiple steps, which amongst others includes what the SEBI chairman is talking about. If you enlarge the contract time horizon, so obviously the number of contracts will come down. So the volume of trading will come down. Naturally, BSE will get impacted. And naturally, broking houses which have significant derivative trading volumes will get impacted. And that's why they're reacting. And please remember that none of these stocks are quoting cheap. They are fully priced. So, any kind of news which indicates that their income will suffer definitely will have a detrimental impact, and that's pretty much what is happening. So whether it's a BSE, whether it's an Angel One, there is a rationale for them correcting, and that's what is happening. And I don't see this as we can't dismiss this move by SEBI, because this is what generally is the thinking of the regulator and the government.
I guess we have Arpit with us. Arpit, what do you make of IDBI Bank on the charts? Because it's a 7 to 8% move just on an intraday basis. How do you see the structure, and are the volumes also quite impressive at this point in time?
So looking at the overall chart structure, if we see the chart structure of IDBI on the weekly setup, so it has taken support near its major supports around 88, 89 levels, and on the daily scale holding well above 200 DEMA. So as rightly mentioned, we've seen a sharp spot on the daily scale on the intraday basis almost by 8 to 10%, 8.5%. So I think on the upside, 102, 106 would be the major hurdle zone. And looking at the volume setup, definitely closing above 95 levels can trigger the stock towards 102 and 104 levels. So I think overall bias would be positive for an upside move towards 102 and then 104 levels. That is a major hurdle zone for this account.
Okay, that's the take coming in on IDBI Bank now. Just looking at the entire screen, Cipla, DRL, these are all names which are holding out quite smartly in trade. Other than that, Reliance, BEL, that's also where you're seeing meaningful moves come in. And Sudeep, it all seems to be building up for the Reliance Jio IPO. Citi Note pretty much predicts that as well. But what is your sense? Where do you think the valuation is going to add up? Because the math, according to Citi, seems to be indicating the SOTP valuation for the parent Reliance Industries at a sizable $120 billion.
Absolutely. I think, SOTP valuation of Reliance is definitely significantly higher than the current market capitalization. You have to look at the telecom business, which in itself is the biggest telecom business in the country. And, they will get a valuation which should be more than Bharti at this stage, based on the numbers, based on how things are shaping up. Then you have the retail business, which is the largest retail business in the country. They have carved out the FMCG business from the retail now, and the FMCG book turnover and the volume itself today is almost equivalent to Dabur, and it's growing on a daily basis. So you can imagine that. Then there's a new energy. So I think the moment you start doing SOTP valuation, Reliance looks very, very attractive, and we have been recommending a buy in Reliance from a long-term point of view, and that remains. The traditional businesses had their share of challenges, but the refinery being unique and they're capable of refining multiple grades of crude, that gives them a unique position, and their GRMs are always better than industry as well as the Singapore GRMs. So that's another advantage. Petchem issue depends on global prices and whole lot of fluctuations on the commodity prices, and that's one segment where pressure has been continuing for quite some time. Other than that, I think all the businesses are firing on all cylinders.
But everything but the stock price, Sudip. What do you do about that? It's been stuck in a range for so long.
I agree. I think the value unlocking, Aisha, will happen once these IPOs start coming. I think Jio is going to be the first off the block. Retail probably will be the next. Somewhere FMCG, new energy, all these value unlocking will start. And I think at some point of time we will start seeing value getting created, which will reflect in the share price as well. But whichever way you look at it, I think the share definitely looks attractive from a long-term perspective. If you ask me what's going to happen tomorrow or day after, it's very difficult to predict. But if you take a 1 year kind of a time horizon, it's definitely worthwhile.
Arpit, what's your reading? Because ever since SEBI came out with those proposals with regards to minimum offer size requirement for large IPOs, one has seen a lot of excitement around Reliance. But can it really sustain the gains?
From last almost 6 to 7 weeks, the stock was falling from higher levels, and last week we've seen a recovery on the weekly time frame above 1400 levels, and that is also one of the major reasons why we've seen good recovery in the Nifty. So technically, definitely it is a major support zone, bouncing from its 200 DEMA, almost on the verge of a consolidation breakout on the daily chart above 1400 levels. So I think slowly, steadily, the base of the stock is shifted higher, and the stock can move towards 1450, 1480 levels, but the pace of gradual buying would be very slow, as it has been broadly trading in a range. So overall bias will be positive till it closes above 1400 levels for an upside move towards 1450 and then 1480 levels position.
So, like Aisha said, anything but the stock price, and we wish to see that moving. But let's take a look at the levels also. Just 3.5 minutes for the market close, and 25,000 is the mark which we are trying to keep at it. But 25,100, that we have lost it from the day highs. The markets are frizzling the gains. 25,076, around a 76 points downtrend from the high. But at the same time, let's take a look at how the market closing looks like. And Ashesha is standing by and giving us a snapshot of the market closing.
Well, yes, Mansi, markets did give up some of those gains in the last 1 hour of trade, but despite that, Nifty is ending with an uptick of a marginal 25 points, ending above that 2550 mark. Nifty banking index should also come up for you on your screens. This one also was underperforming in trade, but Nifty banking index, that one is also ending with an uptick of nearly 30 or 40 odd points, near that 55,740 mark. Broader markets indices should also come up. Nifty small and mid cap index, remember, as I mentioned, we gave up all of those gains. Nifty small cap index ending absolutely flat for the day. Mid cap index though is ending with a downtick of nearly 0.4%. In terms of top gainers from the Nifty 50 pack, we had Cipla. This one is ending up 3%, the biggest gainer on the Nifty 50 index, followed by Dr. Reddy's and SBI Life. So these were some of the top gainers. On the losing side though, Bajaj Auto, this one is ending nearly 1.5% lower. Coal India and Power Grid were also tepid in trade today. Bajaj Auto down 1.5% at 8695. We should also have Power Grid ending at 284, 1.5% lower on this counter as well. In terms of individual sectors, pharma stocks were bucking the trend. So we had Mankind Pharma, this one was up 4%. Cipla was up 3%, as I just mentioned. Dr. Reddy's also ending the day with an uptick of nearly 2.5% in trade today. On the losing side, though, FMCG stocks were under pressure. Nifty FMCG index was the biggest sectoral loser in trade today. It should come up for you on your screens. Nestle down 1%. We had Dabur, which was down 3.5%. Britannia down nearly 2% in trade. And we also had United Breweries. That one is also ending with a downtick of nearly 1.5 to 2% in trade. In terms of individual stocks, remember we had this all-important commentary that came in from Tuhin Kanta Pandey, SEBI chairperson, with respect to derivative contracts, that the duration and the maturity can be longer going forward. So we saw that crackdown come in for BSE. The stock is ending 7.5% lower on the back of this news piece. But it was not just BSE. Apart from that, several of these capital market plays were under pressure. Angel One ending 6.5% lower in trade. We have Motilal Oswal, which is down 1.5%. JM Financial Services and the likes. CDSL also ending the day with a downtick of nearly 1%. Meanwhile, Hexaware Technologies, we had a brokerage report on this counter where Nuvama has initiated coverage with a buy. 950 is the target price. Hexaware ending 4.5% higher on the back of this news piece. Jupiter Wagons on the back of an order win, although the value of the order was not as much. They received letter of intent for Vande Bharat trains, the order value at about 225 odd crores. Jupiter Wagons at one point, in fact, was gaining nearly 7%. It gave up all of those gains, ending the day with an uptick of nearly 3.5%. CAMS, meanwhile, where the board has received no objection letter from RBI for transferring online payment aggregator activities to CAMS Payment Services, which is a wholly owned subsidiary, the stock ending 1.5% higher. Railtail Corp, again on the back of some order wins, they've won orders worth about 50 odd crores. And Swiggy, meanwhile, CLSA has maintained accumulate rating and they've revised their target upwards to 509. Swiggy is also ending 2% higher. So all in all, on the index level, Nifty is ending near that 25,075 odd mark, but a whole host of individual buzzers in trade were buzzing on the back of news piece. But that's all the time we have on this edition of the show. Thanks so much for tuning in.